Most people look at a candlestick and only see green or red, but every candle is a complete story of one time period. It tells you where price started, how far it traveled, where it was rejected, and where it finally closed. If you can read that story, candles stop looking random and start showing pressure, control, and hesitation. OHLC simply means open, high, low, close. These are the four prices hidden inside every candle. The open is the first price traded after the candle begins. It is the starting point of that time window. The close is the final price traded before that candle ends. It is the ending point of the same window.
The thick part of the candle is called the body. The body connects the open and the close. If price closes above the open, the body is bullish. It usually appears green because buyers finished in control. If price closes below the open, the body is bearish. It usually appears red because sellers finished in control. The thin lines above and below the body are called wicks, or shadows. They show the full range price explored. The top of the wick is the high, the highest price reached during that candle. The bottom of the wick is the low, the lowest price reached during that candle. Imagine a candle starts at 100. That first trade becomes the open. Price rallies to 108, falls to 96, and then recovers. The wick remembers both extremes. If it finishes at 104, the close is 104. The candle is green because the close is higher than the open. A bullish candle does not mean price only went up. It means price closed higher than it opened. A large bullish body means buyers moved price a long distance between open and close. But if the upper wick is long, buyers pushed high and then lost some ground before the close. A bearish candle means price closed lower than it opened. Sellers finished the period with control. A large red body shows strong selling pressure from open to close. But a long lower wick means sellers pushed price down and buyers fought back before the candle closed. The body size tells you how much progress was made between the start and the finish. A small body means the open and close were close together. The candle ended almost where it began. A large body means one side controlled most of the period and forced a meaningful move. Wick size tells you where price was rejected. A wick is evidence that price visited an area and could not stay there. A long upper wick says buyers tried higher prices, but sellers pushed back before the close. A long lower wick says sellers tried lower prices, but buyers stepped in before the close. A candle only describes its own time frame. A 1-minute candle tells a 1-minute story. A daily candle tells a full day story using the same 4 points: open, high, low, close. The rules do not change, only the size of the time window changes. A line chart usually connects closing prices. It is clean, but it hides the battle inside each period. Candlesticks reveal the range, the open, the close, and whether price was rejected at the top or bottom. That is why candles feel more useful for reading short-term pressure. Sometimes the open and close are almost the same. That creates a tiny body called a doji-like candle. It does not automatically mean reversal. It means neither side made much progress by the close. The important question is context. Did that indecision appear after a strong move, near support, or near resistance? A candle that closes near its high shows buyers kept control into the finish. A candle that closes near its low shows sellers kept control into the finish. Where the close lands matters because the close is the final vote of that candle. To read control, compare the body to the wicks. Big body, small wicks means one side dominated. Small body, large wicks means price traveled but control was contested. The candle is not only shape, it is the argument between buyers and sellers compressed into one picture. One candle gives a clue. Several candles together give the larger story. 3 green candles with higher closes show repeated buyer progress. 3 red candles with lower closes show repeated seller progress.
Do not memorize candle names first. First ask what the candle actually shows. Where did it open? Where did it close? Where did price get rejected? Who was stronger at the finish? Once you can answer those questions, pattern names become easier and more meaningful. Mistake 1. Thinking green always means safe to buy. A green candle can still have a weak close. Mistake 2. Ignoring wicks. Wicks often show the most important failed attempt of the candle. Mistake 3. Reading one candle without the trend, level, volume, or market context around it. Here is the simple framework. Open is the start. Close is the finish. High and low are the full journey. The body shows progress. The wicks show rejection. The close shows who had control at the end. Read every candle like a short story. Then read the next candle to see whether that story continues or fails.